Even a blind person can see it now. This is an Ethereum-led crypto rally. Ethereum bounced massively. It outperformed everything else. And because of that, because of the direct coupling of Ethereum with various altcoins, many altcoins go up as well. Now the question is, how much longer can this rally last? Is this something that's sustainable? Let's have a look at some on-chain metrics, some data most people are not considering. Now we're currently above $2,500 in ETH. And in the last month alone, we went up by 66%. So an increase of $1,000 roughly. And so here's something I invite you to do. I invite you to check out other crypto YouTubers and see what did they say about Ethereum 1 month ago. My video 1 month ago on Ethereum was this one here, a historical chance to buy Ethereum ? And that video outperformed the average video by quite a bit. So the average video is here in gray and that video is in blue. So I hope that a lot of people that are following this channel made the move and have made some money with this rally. But yeah, during that video, we discussed this chart here. It is the Ethereum dominance. So it looks at how much of the entire crypto market cap is currently in ETH. And so here's that same chart today. We have bounced exactly where we expected to bounce. There was a floor formed in September of 2019 and that support got respected by the market. And yes, of course, there are also fundamental reasons for this rally. There are always news why something might go up or down. But I think in general, when something breaks out to that degree, it's usually because the asset was historically cheap. Now, on a fundamental level, it's very hard to value a cryptocurrency, to put a fair price on a token. And the reason for this is we don't have any kind of valuation method that we can use, for example, in the stock market or in the property market. In the property market, we can just look at what's currently our rental income. What's the rental yield? Or for the stock market, we can estimate what are the future cash flows, the future dividends of that stock. And then we can put this back as present value to today, sum up all of those future cash flows. We don't have cash flows necessarily in crypto. Yes, there are staking rewards, and yes, we can get some return in decentralized finance, but those are all through borrowing and lending, or it is through token dilution. It doesn't necessarily have a direct impact on the market cap. But what does tend to work is psychology, as in, are people currently in profit or in losses? And when people are in losses on an asset that tends to go up over time, where people tend to believe in that asset long term, then it is a good buying opportunity. And the average cost basis, that's called the realized price in crypto. And the realized price of Ethereum was at $1,976. So this was posted by a member in our premium community. So Ethereum used to be where Bitcoin was in November of 2022, right? So this is the realized price of Bitcoin. It always makes sense to buy strong assets when the average market participant is in losses. Of course, for Bitcoin, we are quite far away from the realized price now. It's at 45K. Now, one can make the argument that the move from proof of work to proof of stake for Ethereum was a potential mistake. At least the outperformance of Ethereum completely vanished once the merge was done. And so not every technical news around a cryptocurrency is positive. What we've got over here, this arrow, that's the merge. So this is when the tokenomics of Ethereum changed. And ETH was on a constant downward trajectory versus Bitcoin from that point onwards. But now we are bouncing again. The problem is that Ethereum didn't have a good story, as in it was neither fish nor meat. It was not a great store of value because Bitcoin already had that position. It was also not the fastest, most scalable smart contract platform. It was just the fastest. And so there was this talk around Ethereum becoming an alternative store of value, right? Ethereum becoming the ultrasound money. Not just sound money, but ultrasound, as in the supply might shrink over time. There were some very nice charts around that ultrasound money narrative on this website, but let's recreate them. So this is now Ethereum's supply over time, and this is the merge. So since the merge, the supply of Ethereum did not grow. What we've got at the bottom, that's the supply of Bitcoin. Now, I don't know about this data glitch over here, why that happened, but in general, after the merge, Bitcoin supply still grew, while Ethereum supply didn't change much. So when we look at Ethereum supply relative to Bitcoin supply, we see that it shrunk because Bitcoin expanded and Ethereum did not. And still, even though the supply of Ethereum relative to Bitcoin supply went down since the merge, the price performance did not reflect that. But the market is never dogmatic. It's always about risk versus reward. It's always about, is something still worth buying, even though momentum might not be that great. And this is probably what happened with this bounce. Now there's always the question, what's driving prices? Is it the news or is it psychology? I believe the latter is more important, but still I do want to share some news. So there is an update for Ethereum. It's the PECRA update, and it will improve a few usability parameters. For example, when swapping on chain, we don't need 2 transactions anymore. We can approve and confirm at the same time. Our wallets can become smarter. They can batch transactions, which will reduce transaction costs. Gas can now also be paid in any token, so not anymore just in Ethereum. And this is a huge improvement, right? It's always very cumbersome to keep those small amounts of Ethereum in a wallet. And then there's also improvements to staking, how that's easier. Not necessarily in terms of how much capital is required, but just technically. But in the end, the reason for such a violent rally is just that Ethereum stays relevant. It especially stays relevant for real world assets, for bridging of stable coins, and for decentralized finance. And so having a market dominance of only 7 to 8%, while at the same time, more than half of the decentralized finance ecosystem is Ethereum. And the same is true for the stablecoin market cap. Then there's an obvious mismatch. And so yes, there is competition for Ethereum, especially Solana, right? A lot of the active trading, especially for meme coins, now happens on Solana. Donald Trump also launched his meme coin on Solana, not on Ethereum, but still. Have a look at Ethereum relative to Solana. Even if you work with the case that long-term Solana might continue to outperform Ethereum, where I'm not that sure if that's actually what's going to happen, even within that framework, Ethereum still has at least 15%, potentially even 30% to outperform SOL. It's interesting how the on-chain activity comes back to Ethereum. So there are trades happening. Transactions are more expensive still on Ethereum. Yet we saw 1.7 billion worth of trading volume on the chain in the last 24 hours. This creates a lot of trading fees. Now this compares to 1.3 billion on Base. Isn't it interesting, right? Base is way cheaper. It's a layer 2 on top of Ethereum. We should expect more transactions, but it's actually not what we see, again, because there's all of that capital on Ethereum. And here's the activity on Solana, 3.3, 3.4 billion. Yes, it's larger than Ethereum by roughly 2x, but it's also all player versus player meme coin trading. A lot of this is also just wash trading. Many people were worried about the Ethereum staking program, because what does staking actually do? Staking rewards the people that lock up their tokens, that don't use their tokens today. It rewards those people with more tokens in the future. So what's happening is that supply today gets artificially contracted, which pushes up the price, to then potentially dump the price in the future when those stakers get their tokens back and then potentially sell them. So effectively what staking is doing is it's pushing away the supply into the future. It increases the price today to then dump it in the future. And so there's always the worry about a staking program potentially deflating, right? When the number of staked tokens is going down, that is direct selling pressure on the market usually. This wasn't necessarily a problem for Ethereum for a while, but the worries started popping up at the end of last year, because that's when the growth in the staked Ethereum halted. People were wondering, is this going to just turn around? Are we going to see a lot of unstaking now? Are people going to sell their Ethereum? The answer is, it seems like this is not what's going to happen. It looks like the market found its equilibrium. Also, it seems like the worry about the expensive transaction fees on Ethereum tend to subside somewhat. Of course, when there's a lot of activity, when many people want to transact, individual swaps can cost $10, $20, and peaks even $100. But currently we are very far away from this. So this is the average gas price for Ethereum. And this went up a lot in the past through NFT trading and DeFi protocols, because those kind of protocols are very complex. They need a lot of gas. But now we have mainly swapping activity. And again, there are a few attempts to make the Ethereum base layer also more scalable through batching transactions, etc. And then of course, we've got traditional finance Binance. What we see over here is the Bitcoin spot ETF. So for roughly 1 month, we have mainly seen inflows. What we see here is the Ethereum ETF. It wasn't that great for a long time because Grayscale sold a lot of Ethereum. It converted the trust into an ETF. But in the last few days, at least, it seems like we are somewhat more balanced. There aren't as many inflows compared to Bitcoin, but at least we don't see the constant outflows, the constant selling pressure from Wall Street. Now, finally, we enter a market again where everything is going up. And I think it's important to seize the opportunity, not just randomly buy things, but buy the things that tend to go up more than others. Now, that's easier said than done, but let's have a look at Virtual, for example. How can we find something like Virtual's protocol not just a week ago, but how can we pick it up early, as in when it just was a few cents? I don't think that we have to reinvent the wheel. We don't have to be the best traders on the planet to figure this out. We can just have a look at the people that tend to move markets, that tend to make good trades. For example, here's somebody that did not necessarily always do the best trades. So here are signals by Ben Armstrong. He got some virtual tokens very early on allocated for a promotion. He sold this for very low prices, 1.4, 1.3 cents. So yeah, following people like Ben Armstrong or BitBoy Crypto is probably not the best idea. But there are some people that do make regularly very nice trades. For example, this guy over here, Brian Young. He's got more than 2 million subscribers and he mainly talks about crypto. He was one of the very first influencers that we track that bought virtual token for very low prices. 15K over here for 7 cents. The community talked about this quite a bit, 61 comments. That was more than 1 year ago on the 21st of March 2024. And so the rest is history. The price went up by more than 6,000%, even after a subsequent crash and then the current recovery. The price is still up by almost 2,000%. Crypto is not necessarily a game where the people with the best fundamental analysis win. I think it's much more of a player versus player game. It's much more of a game of insiders versus the not so well informed retail investor. Even though YouTubers like Brian Young do very good crypto content and they also trade well, it's very hard to figure out where do they actually put their money and how much do they invest. Even when I search here for the Virtuals token, I can't even find a dedicated video on Virtual on his channel. The token might be hidden somewhere in those list videos, but that's about it. Now, the first dedicated video on Virtual's protocol was published half a year ago over here. That video outperformed the average video. The average video is here in gray and the performance of that video is in blue. At the time, the price was at 41 cents. And even from that point onwards, we went up by more than 1,000%. So I publish videos on various altcoins regularly on this channel. I try to find the ones that still have a lot of upside potential. So feel free to subscribe over here. Now, if it's that easy to make money just by looking at what other people are doing, how do we actually know that early what, say, BitBoy Crypto or what Brian Young is doing? The answer is wallet tracking. With some on-chain analytics, we found out what kind of wallet is owned by what influencer. For example, over here, we found 5 wallets of Brian Young. In total, we track almost 600 wallets. So that's of various influencers. And the way we find those wallets is by looking at what kind of NFTs are they holding, what kind of tokens are they holding. Let's say they share in a video that they have $150,000 worth of a very small token. There aren't too many wallets that might own that amount. We're looking at related wallets, deposit addresses on centralized exchanges. We're doing all kinds of small tips and tricks, and those are all explained here in this little tutorial course on wallet discovery. So that can be found below at thebitcoinstrategy.com. And so the premium community of this channel is focusing on that. We try to find new wallets, we share those wallets with others, and then we track the wallets. And then sometimes we find out that some influencers aren't always ethical. For example, here's a video by one influencer that talked about the Champ token just after we got the buying alert. So that's then the way it works, right? The influencer buys a small cap cryptocurrency and then afterwards promotes it on the social media following. And then the social media following is buying into the token, pushing up the price even further. So a classical pump and dump, and the winners are always the people that buy in early, before all of that social media publishing has been done. That's what the wallet tracking is so useful for. And so clearly it's time to make money again. Since October of 2023, more and more money is flowing into the market. The stablecoin market cap is going up. So as per tendency, cryptocurrencies should go up in price. Now the problem is that returns are very concentrated in just a few winners, right? It's a winner takes most game. It's player versus player. And the vast majority of people still lose even in market conditions like this. But yeah, we are tracking those almost 600 wallets. We've got our dedicated influencer trade channel. And when we see insiders like the Memecoin or Based AI team accumulating a very small market cap token, for example over here, KEK, that's a signal of today, then it's likely that the price rises, right? There are all these accumulation buys, and as long as insiders buy more and more of a very small token, things tend to go up. So this is now an appreciation of almost 200% over the span of a week. And so yeah, there are two ways to make money. We can simply just take random tokens and they are likely going to appreciate to a degree. But if you want to take full opportunity of this market, it's better to follow the smart money, right? It's better to buy the virtual protocols of this world when it's just a few cents worth of a token and then moves to several dollars. I'm of course sharing my own trades in premium as well. That goes without saying. And so feel free to check it out. It's currently $125 per month. There should be a link somewhere here on the screen, probably at the bottom right, that leads you directly to that page. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.